much better. Much better. Hey, how are you, Rahim? How's everybody doing? How is everybody doing? All right, let's do this. Hello, hello, how are you guys? First of all, I want to address my shorts on gold. Yes, Cadien is Olympus trade. He will manage it before the CPI data. Don't worry about it. You know what? I want to address my gold trade today. I made a few mistakes, right? Now my bias was good on trying to trade the short side in this market, right? I had my sell limits around this level here because I misdrew the imbalance that I was trading. So I realized that after the fact, and my trade should have been triggered here at the spike up on that imbalance. So yeah, that was my mistake, and that's why I missed all the trade, right? And then I tried to trade a this zone of supply to catch up with the position, and that was not the real trade that I was intended to take this morning. So yeah, I lost 1% today again. But this was a real bad mistake of me misdrawing that imbalance zone. Well, that's fine. The trade has been journaled, so let's move on from that. Now, there's a couple of things that I want to share before the data. First of all, I'm going to have my squawk on. Here you can see the notifications on my volume, etc. If you don't know, this is a squawk. No, 10 pips is not very risky, mate. If you know what you're doing, it is not very risky if you're trading the OK zones. For example, this trade was 8 pips. 8 pips in risk. It would have yielded, about 36 pips for an 8 pip risk. It's all about trading your system without making mistakes. And sadly I made a mistake. I made a big mistake today of misdrawing this imbalance to here. So the imbalance was not mitigated, and then I missed on the real move. So that was my mistake today. I own on my shit. I always own on my shit. Yeah. Power cell zone should have been, etc. Yeah. Now we have CPI data. There's a couple of things that I want to look at. So this is not an imbalance anymore. This is not good. This has already been mitigated. Now I'm going to delete everything, guys, because there's new plays coming up for you and this CPI data dump. So don't be scared about high volatility. We are looking for exactly that. So basically I'm looking at a few demand areas. First of all, this one right here. Now let me change to the correct demand zone. Right here, this is the first demand zone. There's tons of sell side liquidity being built up here. Right, this is all liquidity. Now, I'm only looking for longs today on CPI data. It depends on, of course, the CPI release, right? It depends on the CPI release, but it is expected that the CPI year over year is going to come out lower, that the CPI month over month is going to come out lower, etc. So it depends on the actual CPI. So what I'm going to do, I'm going to have my squawk here because I need to look at the numbers as they go out, but you will be able to hear them, because it's a fucking squawk. So I have these zones that I am looking forward to. Couple of demand areas. This is the actual discount level or the strong low in this case. Remember that it doesn't matter what price is.
Political news as a German government official notes the
Yeah.
EU summit will be
I'm going to
addressing the
mute my squawk and, I'll mute it just before the actual stream, right? I'm bullish, GBP and ZD on the 4-hour chart. What's your personal thoughts, Orlando? Demon Street. I really don't trade that market, but I will have a look at it, my friend. Yes, I will have a look at it. Don't worry about it. Yach. Right. So, if the CPI data comes out very bad, high inflation, this is going to rally hard, but not before it takes out all of these weak players that are front running the news. So this is what I'm waiting for. Either it comes down to this zone where we will be buying, and or either it breaks with this zone and comes back to this zone where I will be buying. And remember that this is going to come quickly, so um, uh, just a second. We are, in fact, a couple of minutes away from that CPI data dump, I think. It's 6:23. We are 3 minutes away from the data dump. Yeah. So I'm going to again turn on my live squawk. Oh shit! It's in an hour. All right. So this is the thing, guys. Uh, um, Hold on. Forex Factory, right? Right. Here in Forex Factory, it says at 6:30 a.m. But I misread my time. So we have an hour. We have an hour until the yeah. We have an hour until the CPI data comes in. So my bad. Yeah. So why don't we stay here together before the release, or I could come back. I could come back when the release is, 30 minutes before the release. Mm, I don't know. Let me think about it. What do you guys think that we should do? I think that we should come back. Um, I think we should come back after the release. I think we should come back, in 30 minutes for the release. No, we're going to stay live. We're going to stay live. We're going to see plays for the release, right? This is green on my, no, not green, I'm sorry. Uh, Light blue on my, next to the markets, mean possible news trade. This green means that I have a trade on. I have a trade on. I also have a trade on gold, but that, my friend, is on the swing trading group. Right, so we're going to stay here for 1 hour before the actual CPI release. Sorry about that. So let's wait and see what happens. Let's have a look at U.S. equities, right? I have been looking, my friends, for longs in U.S. equities, but you know what? We already have those longs in play. Yes, my friends. Now, this is for the swing trading group. Copy. What the hell does that mean? I don't understand Turkish, so yes, stick to English, please. So I've been looking for longs in U.S. equities, right, for the swing trading group. Yeah, I'm gonna guide you through my thought process on what I'm going to do today, right? I'm sorry, I've been looking for shorts for the swing trading group, not longs. So basically, this is the daily chart on the S&P 500. I'm looking for those S&P 500 shorts. Now, the reason that I'm looking for shorts is because of how the Federal Reserve is still looking for. Yeah, thank you, Gherkin. Um, I'm sorry, I was looking for shorts on the S&P 500, right? Now, the reason that I was looking for shorts on the S&P 500 is because of the Fed wording on future hikes in its main rate of interest, right? Um, am I still looking for shorts in this market? I don't know. I am not completely comfortable with trading the short side in U.S. equities still. Yes, Olympus CAD yen trade is still very much on, and I do have a play for gold for the release. So I was talking about the S&P 500, right? Why don't we have a discussion for on the S&P 500? Um, what I'm looking at here is this. If you notice, the S&P 500 came towards that zone. This was my high value area for S&P 500 longs. That's not my trade, mate. Yeah, I'm not gonna give you a live trade. Crocodile. If you are a VIP, you can go to the VIP channel and look for that trade. So I'm talking about S&P 500, and here Nick says that he is still looking for shorts on the S&P 500. I am undecided about that, my friend. I was looking for shorts on the S&P 500 too. Let me show you what I was looking and traded in the past. I was looking.
Player refreshed.
Fuck. That scared me. That scared the shit out of me. I'm going to turn off the volume on my live squad. The structure in this market is very much still bearish, right? Very bearish structure in this market, if, in my opinion, something like this. I don't know, right? I'm not the best channel uh, drawing artist, but this is the daily chart on the S&P 500, right? Now, if you look at the past time that the S&P 500 almost retested the structure in this market, we had that big, move to the downside, right, creating a new low. So, this retest might also be that break with the low, right? That might ignite a break of this all these value zone, or what everybody thinks is a value zone. So there's a couple of things. Uh, you know, um, it all depends on the next rate hike, in my opinion. Why? Because if the Fed slows down the pace of its rate hikes and starts hiking rates, at 0.25 basis points, etc., and they start using a more or a less hawkish language, this is going to be very bullish for U.S. equities. Now, that happened all the past rate decision here or here. I don't remember, right? But it ignited a big rally in this market, right? So I stayed off of looking for aggressive shorts until the structure, the immediate, let's call it the midterm structure, which is this one, this pullback right here, breaks. So, in order for me to look for those shorts, I would want this lows to break, right? And as you can see, this is where buyers have jumped into this market. Now we need to confirm, the break of the structure before going short, in my opinion, right? And should that happen, the risk to reward ratio on a possible short position is not the best, right? 1.5 short, and also we would be shorting this market at the very lows of the move. I mean, we have missed those short entries, quite a few times already. So it's not my preferred, it's not my preferred option, right? And if the Fed, in fact, slows down its pace on this insane rate hike, momentum that they're in, then long positions are the play here, my friend. And unlike shorts, right, we also need that we also need confirmation on, and the confirmation here is clear, right? We need a break of the structure, we need a break of these highs, and we need a break of this key level right here. Right? So a break here and a retest of this zone could bring, in fact, a much better risk to reward ratio for a swing trade in this market, for at least first targets, which would be this key level. Would bring a 2.78 R to first target, of course, letting the rest of it ride for all-time highs, etc. So I am looking forward for the Fed to to unravel or to start slowing down its massive push on rate hikes, for this play to really play out, right? So I have a couple of things going. Of it right for all time. I have two 50% discount codes, my friends, for anybody that wants them. Right? Just confirm that you can hear me. Just type yes on the chat if you can hear me, because I am getting an error from YouTube. So please just type yes on the chat if you can hear me. I will come back, Nick, to your questions after this. All right, so can you hear me? You can't hear me. All right, Raymond. I have two. For the first two people that join or that subscribe, they can use this this 50% this 50% code. The code is Showtime15, and it only works for the monthly subscription here. Just go here, use the code Showtime15, and you will get a 15% discount to any of the swing trading group, the VIP group, or the crypto VIP group. Use it now for the first two people only. Boom, boom. So let's move on and let's have a look at this. All right. I think you are right about. I think you are right short term. I'm looking for a pullback from an initial reaction as it becomes clear that a pivot is going to happen later than the market is factoring in. Yeah, I agree with you. CPI will affect it or not? Of course it will. Hello, sir. What are your predictions on gold with the CPI? Let's get a Showtime 50. I'm sorry, there's none. But I do have more gifts for you guys. I do have more fucking gifts for you, so don't go anywhere. You know, don't go anywhere. Let's get a Showtime 50. All right. So, what are my thoughts on gold for the CPI? Well, I already went through them, guy. But I'm going to go through them again. And let's go to a 5 minute chart. Boom, boom, boom. Now, there's a couple of things that I want to see. This is the 5 minute chart. Or something like that. So I'm going to go to the 5 minute chart to look for those imbalances and, you know, whatever. Right, so 5 minute chart, I do have a fair value gap or imbalance here on the 5 minute chart. If you notice, that is the imbalance or the far or the freaking fair value gap that I want to trade. Now, on the 5 minute chart, well, we have this big imbalance here, which I also is badly drawn. I mean, you have to be very careful when applying, you know, these concepts in your trading, because you have to draw your areas very well, right? Very, very fucking well. Because if you don't, you're going to get fucked. Right? For example, today I misdrew the imbalance that I was supposed to trade right here, so I missed the move. And when I tried to enter or catch the move, I was already trading a bullish market. So today was filled with mistakes on my part, just because I misdrew that imbalance that I was trading. So be careful when applying, you know, liquidity concepts and drawing your you know, zones. So a couple of zones that I'm looking for, right? A couple of zones that I'm looking for, to be completely and orderly honest with you. What I'm looking for is this. Hold on. This zone has been already mitigated. So, I'm sorry, on the 5 minute chart, how do I, here, this zone right here. So, on the 5 minute chart, this is my play, guys, on, on gold. I am not predicting shit, understand this. Let me talk to you. So I'm gonna go big. I'm gonna go full fucking screen like this. So let me talk to you. I am not predicting shit. This is not a game about predicting what the market would do. This is a game about having a trading plan, and a trading plan, a step-by-step trading plan that you would need to be disciplined with, right? For example, I have a trading plan on the long side on gold should inflation numbers come higher than expected, right? If inflation numbers come higher than expected, I will be trading this plan that I am sharing with you. If inflation numbers come lower than expected, I have no trade, right? So I'm not predicting anything. I forgot to shave. I just realized that. Sorry about that. Buy or sell gold. Well, Yu Xiang, you do whatever the fuck you want to do. I can't tell you what to do. So if inflation numbers come, it's very plausible that until CPI, we are going to see gold just range around this level. I don't have scenarios for bearish gold made if it comes better than expected. I just don't. I'm focusing on the long side here. So what I want to see here is, first of all, that my squawk screams, 7.4%, 0.75%, etc. I want to hear those big numbers. That is going to be very bullish for gold, but of course I am not going to put on a buy stop here. That's just crazy. That's not how you trade the news, right? How you trade the fucking news is this, right? You need to understand, first of all, have a plan, right? You need to have a plan. Then, just a second, guys. You need to have a plan. Then, after having the plan, you need to execute your plan accordingly. So I have my MT4 in my middle screen, right? I already have my position size calculated for this possible scenario. And third, I'm going to tell you what I need to see. I need to see high inflation numbers. That, and apparently the market is also expecting high inflation numbers. That, my friends, there's a couple of things that are going to happen. This is why I'm going to come back to the questions on the chat, my friends, after I explain my thought process or my planning goal. Right, a couple of things are going to happen, and that's why I pay for this squawk, because if you don't have a squawk, you can't trade the news, right? Now, if the news if inflation comes higher than expected, what I want, the first thing that I want to see is, at the second the news comes out, gold is going to crash right towards this demand zone and taking out all of these weak players in the market, right? Then, very possibly it's going to do this, what it's doing right now, right? Just have a look at this, what's going on right now. Right now, breakout traders have been triggered in, right? Breakout traders have been triggered in on this breakout, right, of the highs, very possibly with their stop losses here. That's all liquidity, my friends. So the first thing that I want to see is high inflation numbers. The second one is all of these weak players getting stopped out, and the price mitigating this demand zone. Here is where I will take my longs, and because I'm trading a high volatile environment and trading the news, I will use, I'm sorry. Oh, my coffee went through the wrong tube. I'm going to use a less than half of my original risk. So about 0.4% risk. And I'm going to target, my first target will be, so if I take my long around this, of course I will be getting in at market, about a 7R, right? That's my play, that's my play. No, it's not COVID. I think that I don't know why or what. It's showing me how I'm gonna die, because this keeps happening a ton. Water going through the wrong pipe whenever I drink, and I don't know. That's just my thinking, my weird thinking. So that's my playing gold. We have a couple of questions, guys. Which strategy is you are using, guys? My you know my 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 entry model is based on spotting liquidity in the market. That's how much I can tell you. Imbalance here also. So this is looking very good. Imbalance here also, and I can calculate my power buy zone. But should this be the high of the move? Should this be the high of power buy? Yeah, should this be the high of the move? My power buy is right there. So this is looking good, my friends. This is looking very, very good. So that will be my trade. Should everything that I just explained really play out? She. Yeah, something like a 6 hour or so. This is going to go very fast too. Okay. Now, imbalances, right? Yeah, I can explain to you what an imbalance is. Whenever price, hold on, let me speak to you directly, so I'm gonna go full screen again. Whoa. I should have shaved, right? All right, so this is the thing, an imbalance in the market. What's an imbalance in the market, right? This is a concept that you need to understand because it's righteous, right? It's just very good. Whenever you have a very volatile move that breaks with the structure of the market or changes the character of the market, and when I mean it changes the character, I mean that it goes from bullish induced moves to bearish induced momentum, or the opposite, right? More often than not, when these volatile moves happen, it's because there's an imbalance between buy and sell orders. For example, in this case, I'm going to show you there was an imbalance between sell and buy orders, in the sense that there were more buy orders than sell orders to support price. That's why buyers were able to swipe all the sell orders, at those levels, and move price very, very fast to the downside, creating an imbalance or a gap in price. Now I'm going to show you what it looks like. A gap in price is clearly looked at here. For example, this is the 5-minute chart in gold, and if you want to spot imbalances, all you have to do is look for those volatile moves, right? And right here you have these wicks in the market, right? And you have this big volatile candle without wicks, right? And then you have a second bearish candle that has a wick but did not fill it with, or it wasn't filled with this wick right here. That is a gap in the market, or an imbalance, that hasn't been filled yet, right? So I hope that answers your freaking question. Oh man, this is looking very good. Loving the shit out of that. For example, here we have the same thing, right? We have this volatile candle, right? And then this bullish candle with the wick down didn't come to fill this wick right here. So this is an imbalance right above my demand area, which is something that I love to see. I love to see this exact thing, right? I mean, you can go from candle to candle looking for imbalances, but I just look at the imbalances near the in this case demand zone, because I'm looking for it that long that created the break or the structure here. Yeah, I hope that answers your question. No, I didn't go long on gold. I'm already long, with the Swing VIP group. But this is my play for the CPI data, mate. I haven't put on any what? I I haven't sent any orders to the market yet, right? Because front running a high impact event is just not something that you should be doing at all, right? You should not be doing that. And this breakout pre CPI, I just love this. You know, well, market players in the market are expecting high inflation, right? Um, and this is called front running the news, right? Now, um, this arrow with the dollar signs just pinpoints where probably these breakout traders have their stop losses, and that is called liquidity, right? In this case, sell side liquidity. And that is the liquidity that I am hoping that high that a high CPI reading is going to take out before the real CPI move if it comes out. Do you short it yet? Now. What the fuck are you talking about? I'm not. Have you listened to anything I just said? I don't have a play for the short side in this market, mate. Right, let's have a look at the Japanese yen. Hold on. I'm gonna use the other side of my screen. Yeah, no, I'm not gonna have a look at the Japanese yen. I'm just waiting for this gold. This is my play for the CPI only if everything that I just told you plays out, right? So we are 30 minutes away from I am 30 minutes away. Um, what? We are 30 minutes away from that data. So I'm gonna give you another ticket. Showtime 30 gives you a 30% discount for any VIP group that we have, and it's only for the first two people. Only for the first two people that go here and subscribe right the fuck now. Showtime 30. All right. Now I'm just going to wait and chill. If you have any questions, go ahead. Um, I don't have anything more to show you guys. I mean, the only reason that we're waiting and chilling is because I missed. I was looking at the Forex Factory calendar. Like this. And I didn't realize that. It said 6:30 a.m. And I didn't realize I had it on the wrong time, right? So, yeah. Now we have to wait. Now we do have to wait. Oh. Yeah, we do have to wait. We can talk about the Dash to Trade token. I don't know. We can talk about anything you want. You can ask me anything you want, guys. Go ahead. I'm just gonna sit here and let you run the show for a while. Just ask away. We have 30 minutes to burn. So go ahead. Or, I'm gonna put on a YouTube video so we can watch it together. I don't know. You can ask me anything you want. Before before the data, I'm gonna move like this. Yeah, much better because I'm relaxing. to Dash to trade token. This is our new trade. This is our new cryptocurrency, our new token, right? And as you can see here, this is the Dash to Trade website, and I have my wallet linked to the site, and here you can see that I own 19,500 tokens. So this, my friends, I am investing myself my own money into this because I believe that it's going just to rally. Why? Because of this. This is the dashboard of the Dash to Trade, platform, right? This is very much like the Bloomberg terminal, but for cryptocurrencies, where you're going to be able to have all the information, social metrics, pre-sale analytics, watch list alerts, etc., for any given token that is out there. Right now, the only way to get this information is to go from one side to the other, and sometimes the information is not updated, etc. Much so on the social metrics that it's very important to really pinpoint if these new tokens are going to be trash or if they're scam, etc. So, and to have access to this, that is to this terminal that is launching next year, um, you're going to have to pay a monthly fee, and we only take Dash to Trade tokens as payment. So, because of how strong this terminal is going to be, right? Hold on. Because of how strong this terminal is going to be, much better, right? It's going to attract a ton of buyers into this token, which will create a massive bullish run in price. And you have the ability to buy it at a pre-sale price made. I don't know what the fuck you're waiting for, right? I am not one to push new tokens because if you know me, I really don't gamble too much or dabble too much in cryptocurrency. My crypto holdings are a very, very small, portion of my overall portfolio. Until the Dash to Trade token appeared, the only cryptocurrency that I own was some Ethereum. But now I'm putting money into this because one is a project that I'm involved, and two because it's a project that I do believe in. This is going to be amazing, right? And it's on pre-sale. Just wait until it hits the exchanges, right? If you are interested in it, here you go. This is the site, and just go ahead and read up. You can read the white paper, the roadmap, etc. This is pretty good. And I released a video. A video where I bought, where on the step to step on how I bought this 19,500 tokens, so you can watch it. It's on our YouTube channel. Yep. So we are 26 minutes away from that data release. God damn it. I sure did fuck up again today by misreading that, Forex factory calendar. We know that's fine. We're going to have a good time, right? So, any more questions, or should we go silent mode until the release of the data? I don't know, mates. It's up to you, right? It's up to you. I have absolutely nothing else to talk about market-wise. Yeah, I really went through what I'm looking for here, right? Really, really, really went through what I'm looking for here. So, oh, Mm-mm. What we can do is just fuck around with, you know, some other markets, maybe crypto or some shit like that. Yeah, why don't we do that? Bitcoin. I mean, this is so fucked up, right? How long have I been trading? A long fucking time, man. A long fucking time. A long fucking time. Yeah. So this is, I mean, crypto is just looking horrible, right? Hello, do you back up your decisions with some indicators? No, I don't. I don't use indicators. The reason that I don't use indicators is because well, I do use indicators when I don't know if you notice this. If you know this, I'm sorry, but I developed what's called the F1 strategy, right? This is something that we soft launched a few months ago, but this is what it looks like. This is a momentum-based strategy, right? That's very. I mean, you have to be very disciplined when it comes to trading this strategy. But if you are disciplined enough, this strategy makes a ton of money, right? I personally speaking, more than half of my trades are with this strategy, and this uses indicators, for entries. But the VIP trades that me for trading, I don't use indicators because what I use is pure price action, right? And read liquidity in the markets, etc. So yes and no to answer your question. Please help on GBP CAD. I can't tell you what to do, mate. You have a GBP CAD trade. You know, I can't tell you what to do. I'm sorry, mate. It's up to you. Look at this. Oh man, these breakout traders are about to get fucked, right? Be careful trading breakouts, mate. Surely doesn't work out. My opinion on USD CAD, and I don't know. I don't want to lose focus on what I'm trading, mate, which is gold. Why don't you give me your opinion on the USD CAD and the USD Swiss franc? Maybe I can have a look at it. Right. Oh boy, this is what I love to see. Right. So, yeah, let's have a look at what has happened. USD INR, I don't know what the hell that is. Sorry, mate. And also, I just hate when people just type, a currency pair or a cryptocurrency. I don't know what the fuck that is. Just don't do that on my shows. I'm just not going to listen to you. If you want to have a discussion with me, why don't you tell me what you're looking at, and maybe I can give you my thoughts on it. But if you just type that, I mean, I am not your personal technical analyst, so you either like it or not. I don't care. What will be their future scenario based on your idea? What idea? I don't understand, mate. I don't understand. You're trying to, you're trying to, are you trying to, you know, to do what I just did with gold, but with the US dollar, Canadian dollar, and the US dollar versus the Swiss franc? And if so, why would you do that? Why would you try to trade three different, uh, you know, markets during such a high impact event scenario? Day or data dump? I don't understand. Just a hunch on my part, but is it possible for gold trades to fall an above average rate? No. Gold going to sell? No. Staying long until there is a break of the channel since November 2. You know what, Nick? GPP CAD. That's I don't trade the GBP CAD, but I'll sure have a look at that. I like that GBP CAD. So you're talking about the holy shit. This has been bullied. Oh boy, damn it! I should be looking at this market. Look at this channel. God damn it. So where's your channel at, man? This is the 4-hour chart. So I'm gonna eyeball what you're talking about. Something like this. All right. I don't know where your entry is since November 2. November 2. Yeah, I don't see a channel from November 2. Well, this is lovely. This is just fucking lovely. You know what? I'll pay more attention at this market. Oh, yes. This is lovely. How much is this? Shit. 1,000 pips. But you know what? I'm already in a 1,000 pip move from the GBP USD, so I'm cool. I just realized that might be the same driven move. I'm long from around here, I guess, on a 1,000 pip rally myself on the GBP USD. So yeah, agree. Whoa, 78 people now. We are very close to that CPI release. Let's have a look at the calendar. I'm going to turn on the volume notifications on my Squawk. So we are looking at the consumer price index month over month. The prior number was 0.4%. The Sherbies are 0.3%. The CPI year over year 7.7%. It is expected that it's going to come at 7.3%. You know what? We can have a look at. We're going to have a look at. Yes. All right. I'm going to sit up straight because I know what we can do actually. Hold on. Let me have a look at this. Sorry, I just tapped in. Your view on GoFundMe news is to increase. Sorry about that. Yeah, don't worry, mate. We still have 17 minutes until the data release. I'm gonna put on my gold scenario here. I'm gonna go through the scenario one more time, 5 minutes before the data dump. Don't worry about it. Just stay tuned. Stay fucking tuned. So we're going to go to the Fed side, San Luis. The San Luis Fed Economic Data Research. All right, so right, this is a very nice site where you can look for U.S. data, any U.S. economic data you want. This is the site you want it from. So let's look for CPI. Sticky price consumer price index, median consumer price index. There's a ton of stuff here. Consumer price index, all items for the United States. All right, let's have a look at this. Wow. All right, so we are looking at since 1960. I just want to have a look at the latest, numbers. So it has been increasing. So in June, of course, it has been increasing since July 2022. That's why the Fed is hiking rates so fucking hardly. But you know what? It has been quite stagnant. You know what? We're going to. Just a hunch on my part, but is it possible for gold trades to fail an above average rate? Are you talking about gold falling on high inflation data? I don't think so. That's very unusual. So hold on. Let's go to what was the name of this site? This is another good site. It's the same, economic data, CPI. It's economic data, but for all countries in the world. So this is the CPI data out of the U.S. It's still growing steadily, right? Uh, core CPI. Mm. So right, the so-called CPI core. So right, last the previous month was 6.3 percent, dropping from 6.7%. Yeah, let's wait and see. But the overall trend on this CPI, it's still pretty much, to the upside. So we're going to have to wait and see. This is more liquidity build up here. This is looking much better. More liquidity being built up here. So yeah, I'm gonna go through. This particular. I'm sorry. I'm gonna go through this particular um, scenario on a CPI release just 5 minutes before the release. We are 13 minutes away from the CPI release. And right now, all that I can do is just sit and wait. I do have, uh-huh. So, I do have a 0. I do have 13. My position size already calculated for my possible long trade in gold. I have my MT4 here in my middle screen. I have everything I need. Let's see. I have my pirate mug right here. And yeah, let's just wait. No, I'm sorry. I'm not gonna go. I'm not going to look at other markets, mate. I'm sorry. I told you, I'm not going to lose my focus on such an important and volatile day. You're gonna have to do that by yourself. All right. What has happened? OPEC to issue December oil report today. Oh boy. Bank of England's Bailey. UK faces risk of second round inflation effects. Why are you trying to push the pound down? I don't know.
Just over 10 minutes away now to the bottom of the hour to with the key event for today, the US CPI release for November. And the path of US inflation in 2023 may have more surprises in store after a year in which consumers suffered the biggest cost of living hit in 40 years, spurring steep interest rate hikes by the Fed and spooking investors. So the November Consumer Price Index due, the final report of 2022, is projected to show that while inflation is moderating, it's running at about 3 times its pre-pandemic pace. So just running through the expectations and order here. So that's US CPI month to month, 0.3% expected versus prior 0.4. Reuters with a range of 0.2% to 0.4% today. Core month to month, 0.3% expected to remain unchanged. A range seen at 0.2 to 0.6%, while the year-on-year figure 7.3% expected a drop from the prior 7.7, a range seen of 7.2 to 7.5. Core year-on-year 6.1% expected versus prior of 6.3, a range of 6 to 6.3% seen. As well from the US, the real average hourly earnings for November year-on-year prior revision of minus 2.7, and the real average weekly earnings year-on-year prior revision of minus 3.5.
All right.
So looking to a preview here from Wells Fargo, they're expecting to see the inflation in November decelerated to 0.2% month-to-month gain, translating to 7.2% year-on-year pace. They note that food prices at the grocery store and at restaurants likely continue to rise at a strong monthly pace. However, decline in energy prices and used car prices looks to have dampened the overall gain in price level. So stripping out the food and energy, they note that core CPI rose 0.4% in November, still too high, at least decelerating on a 3-month annualized basis. As well, expecting the decelerating trend in inflation to signal that the Fed's rate hikes are working, but for the overall pace to
All right, I
illustrate that the
understand.
job is not yet done.
So yeah, this website is called Live Squawk. It's if you, I mean, it's what they do is they have Bloomberg terminals, and they just give you to the second news when they come out. It's pretty cool. It's not expensive. It's like $100 a month. It's very worth it, in my opinion. So yeah, volatility jumping into this market. Front runners are about to get screwed, and we will just. Oh, I'm sorry. Ah, I need to do something about these coffee withdrawals. um, yeah. I don't remember what I was going to say. Yeah. So front runners are looking. I'm sorry, like they're going to get screwed. A ton of liquidity just being built up here. A ton. A ton. So, yeah, I'm gonna go through my scenario. Um, all right. So hear me out. This is the scenario that I'm playing. First of all, let me tell you that this scenario is only and only if the U.S. comes out with high inflation data. Only in high inflation data will I trade this setup. All right, let's start with that. Only if this British dude on my squawk screams 0.75, 7.75. Of course, that I'm just joking about the numbers because I already know which were the past month's numbers, right? But only if we have high inflation coming out of the U.S. Will I trade at this particular scenario. Right now, that's the first step. If we get high inflation data, what I need to see is the moment the news comes out, the moment the number comes out, what I want to see is all of these traders, breakout traders. All of this, because you can see that there is some bullish momentum going on the very low time frames. These are just traders front running the news, right? And their stop losses very possibly are below these lows. This is what I call sell side liquidity, right? So what normally happens is that in this case, if we are looking at possible longs in gold because of high inflation data is that all of these front runners and weak players are going to get stopped out. Price is going to come down towards this demand zone, mitigate this demand zone, and then the real move or the real driven move, news driven move is going to ignite, right? Now, this is going to go very fast. There's absolutely no way to wait for confirmation. This is yeah, this is, and the reason that I don't place a buy limit here is because if the data comes out good, I might get triggered here just to see and get stopped out, right? That's why I have my MT4 on my center screen. I have my position size calculated, and I will place and I will push the buy button and move my stops very quickly with a 0.4% risk or so. But this is my play, guys. If you have a question regarding this particular scenario, right now is the moment to ask. I'm gonna go pee. We are 5 minutes away from Mambo. My liquids to be on my fuel. No, nothing. I'll be right back. I'm gonna go pee.
Just 3 minutes ago now until the release of US CPI. Just seeing some moves higher across US futures. I was looking to a final note here from SocGen. They're looking for a gain of 0.3% month-to-month in line with consensus both headline and core CPI in November. And the energy prices should decline, but that should be offset by rising food prices, as well expecting used auto prices to continue to fall in November. And for many months to come, a further slowing in the year-on-year trend is expected, they note.
All right, let's go. Now, full concentration. Right now. No, you do whatever you want, Niak. I can't tell you what to do. I just explained to you that I'm not putting any limit order with such a volatile move incoming without knowing exactly what the numbers are going to be. That's just fucking crazy. Right. I'm gonna move my squawk here to the middle. No, here. Because I need to look at numbers. And I have my MT4 already. Boom. Right, 2 minutes away, 2 minutes away from Mambo. You had an awful day? Well, don't be disappointed. I mean, I lost 1% today. So, I mean, I never have awful days. I try not to. But let's wait. We are 1 minute away. 1 minute away.
One minute to go now. 1 minute.
All right, heads up, guys. Heads up. Heads up. I'm not. Heads up. All right, I have my squawk here. There's that volatility. Boom, there's that volatility. 10 seconds. Oh, someone knows something. Someone really knows something. My long play is not gonna play
10
out.
seconds.
This is going to be a short play, guys. Yeah, this is going to be a very short play, guys. I don't think CPI numbers are going to be high.
0.1%, 0.1% month to month, core month to month, 0.2, year on year 7.1, while core at 6.0.
Roll the
Japet,
S,
that's
it
the US
was.
CPI month to month read below expectations at 0.1%
Yes,
versus
it was.
expected 0.3. That puts core at 0.2%, again below the expected 0.3. For year on year, 7.1% drop below expectations of 7.3, with the core year on year read at 6.0%
200
versus
pip
expected
moving gold.
6.1. As well, we saw the real
200
average
pip
hourly
moving
earnings year on
gold.
year at minus 1.9%, with the real average weekly earnings at minus 3.0.
200 pip moving gold. Damn it. That's a big ass moving gold. You know what?
So overall, looking to the report here, they note that the index for shelter was by far the largest contributor to the
Holy
monthly
shit.
all items increase, more than offsetting decreases in energy indexes,
All right,
as well the food index increasing 0.5%
here are
over the
the
month, with
news.
food at home index also
So
rising
big
0.5.
US CPI month over month 0.1 estimated
Noting
to
as well that the
improve.
indexes for shelter, communication, recreation, motor vehicle insurance, as well as education and apparel were among those that increased over the month, while indexes which declined in November included the used cars and trucks, medical care, as well as airline fares indexes.
Big moving gold. Big moving gold going through all of this. Oh, damn it. That's fine. So CPI year over year 7.1, 0.1, year over year 6% extra. Right, any questions, guys? Who caught that one? Yes. Well, that could have been a great trade. Could have, would have, should have. You know, I had my trading plan. It didn't pay out, didn't work. Now, what I always do when this happens, guys, is ask myself, what could have I done to trade this move? What could have I done? I could have placed a buy stop here with stop losses here. That is something that I could have done, right? And I would have targeted these highs right here for a nice 3.88R. Now, this is something that I particularly hate doing because I used to trade the news like this, you know, putting a buy stop above the previous highs and a sell stop below the previous lows, and most often than not I would get stopped out. Because of today's move was so fucking clean, that would have not happened, right? But that is just wishful thinking, right? Now, yeah, I missed the trade. That's fine. You know, this on the other hand, right? Let me just delete all of the drawings here. This, on the other hand, my friends, is very good for our long-term play in gold. So, with the swing trading group, we have this. This is the account that tracks
So
all
initial
of our
reaction here seeing
VIP
Nasdaq
trades.
100
Hold
futures
on.
surging as much as 4% after.
This is the account that tracks all of our VIP trades. Our gold trade is up 300 pips. Our pound US dollar is up 1,200 pips. And our Euro USD is up 150 pips. So these are all swing trades. But what I'm telling you about how cool this moving gold is because it broke with the highs. It broke with a massive level. So I'm going to look for deep buys in this market after that CPI data. Why don't we have a look at what is going on with U.S. equities? So a big move in U.S. equities, guys. Now, if you remember, this is something that I was looking at for possible longs. And after this break, I am definitely going to look for longs on the swing trading group right now. right now. This is looking very good on the long side, on the long side, right, with lower than expected CPI data, right? Equities are going to rally. Now, DXY, of course, losing momentum. But on the equity side, I am most definitely going to wait for the open and look for those longs. Where am I going to look for those longs? I'll tell you I'm going to tell you that right now. Give me a second. I need to put on my other screen right here. Oh, yes. So, a ton of moves. Yes, I mean, I missed it, but I don't trade breakouts during the news. I just don't do that. It's unprofitable. Sometimes I will miss the move, sometimes I won't. Uh, don't. You need to change your mindset, Johnson, because you really don't have the correct mindset to trade the markets. You focus too much on one single trade, on the outcome of one single trade. For example, today you had an awful day because you lost a lot of money. That means that you don't know. You also don't know how to manage your risk. There's a ton of shit that you need to work on before actually trading real money, which I don't think you're ready for. So check yourself, mate. So where am I going to look for those longs? You asked. Yeah, a couple of scenarios here. A couple of good fucking scenarios here. Now, my preferred zone to look for long should be something in the vicinity of this. Right, this zone right here is very likely where I will be looking for longs. A little bit higher, maybe on the 4,000 level. Just have a look at this. I mean, there's a massive imbalance here. Uh-huh. So there's this level right here that I will be very keen on looking for longs right here. This is the level that I will be keen for looking for longs. And this will be long-term longs made. I mean, this move broke with the overall midterm structure in this market. And because I am swing trading, I'm going to place a buy limit with stop losses below the lows. Now this is going to be a swing trade. I'm giving this one for free right now. Of course, that you will not get any trade management from me whatsoever. Here is where I want those longs to hit. Of course, my targets are all the way up here. Now, I'm placing this after the show, actually, sending this to my VIP swing trading group. Yeah, spreads were very wide. I'm happy with my trading. I'm still up 4% on my swing trades. So, and that's the main reason that I always tell you that you should have swing trades running on the back end of your day trades, because I lost 1% today, but my swing trades are up 4%. So that takes away from the psychology hit of having a bad day when you look at your current running trades up 4%. It's important for you to have diversity in your trading too. So I'm gonna give two people a 50% discount for the swing trading group. The code is Showtime50. All you need to do is go here and subscribe to the monthly subscription on the swing trading group. And do yourself a favor and just have this massive. Just have a look at this. This is the GBP USD running at a more than 2% on a 1,000, and I'm not talking shit. This is an active trade from the swing trading group. More than 1,100 pips. Right now we have gold running again at 300 pips. And this is not part of the swing trading group. This is the VIP group on a trade that I'm turning into a swing trade for the VIP group to show them how powerful that is, right? So again, if you want to be part of something great and have the full, you know, the full array of our trades, and and having this, it's important, right, for your account. It's important for your psychology. It's important for everything to be to diversify your trading and to have long-term holdings, running deep in profits. Um, in your account. It's super important, right? So if you want to catch my newest swing trade, you know what to do. Just subscribe. The first two people that use the Showtime 50 will get a 50% discount for the swing trading group. That's it. For me, guys, I am going to be placing this trade. Boom, boom, boom. Boom, on the S&P 500. This is the daily chart. I'm going to wait for the open, though. I'm going to wait for the open. We are 1 hour away from the U.S. Open. This is what I want. I really want to get triggered in this yeah, I'm sorry, in this trade, so I'm gonna wait for the open. But again, if you have any questions, guys, go ahead and ask. Lauren, the String VIP group is another group. It's another group. Here it is. The VA, here it is, separate swing trading group. It's £50 a month. It's well worth it, as I already showed you. It's well worth it to have trades running. 4.5% profit right now. 4.5% profit. Trades running at 1,160 pips. Whilst you day trade, it's well worth it. So right now with the VIP group, I have this Euro USD that I turned into a swing trade, running at 160 pips. I might cut it down here. I don't know, but I forgot. Uh, yeah. How much is it running right now? My Euro USD. I forgot to update my VAP, so that's 160 pips. 160 pips. Yeah, I mean, it's another group. All right. Thank you for joining me, guys. Heads up to this possible change, complete and utterly changing the structure, long-term structure in U.S. equities, guys. I mean, this is looking better and better and better and better and better and better. Now, I'm not going to trade I'm not gonna trade. I'm not gonna trade the breakout, right? I'm not gonna trade the breakout here like this. I just hate it. I need a pullback. I need a pullback to trade. I want a better risk to reward ratio. And if I were to trade, the breakout, very possibly I will incur in, a drawdown. So heads up to that. All the swing trading group. Hello, what are your thoughts on U.S. oil daily time frame? I don't trade oil, mate. I'm sorry. So thank you for joining me, and I'll see you guys tomorrow. Trade safe. Do yourselves a favor. Join our swing trade group. It's full. I mean, it's full with this, right? One last look at this. I mean, how beautiful it is just to have a trade running at 1,180 pips. A trade here. This is just starting running at 320 pips, and this Euro USD running at 160 pips. I might just close this. This Euro USD. I might not. I like that it broke with this level, so I'm holding it. That's a VIP trading group, and yeah, thank you for joining me. See you guys tomorrow. Bye.